Today, we're looking at out-of-court settlements with Federico Gaito and Ilya Huggins. Let's dive in. On today's agenda, we'll look into out-of-court settlements. So now, guys, we're going to start with a quick warm-up question. This warm-up question, we're pretty warm already, but this warm-up question is, what initially drew you to the NPL industry? From all the industries, why NPL?
Well, in my case, NPL was, as I said in my intro, I've been in the finance and real estate industry all my career. Initially, I was at BBA and Citi, and then GMAC. At GMAC, we were one of the largest lenders of mortgages worldwide. And then securitizing all the portfolios. So one of the areas of being a large lender is the loans that become delinquent. At this time, the NPL industry, so before 2008, before the GFC crisis, the NPL industry was not a very sophisticated, professional, and mature. And back in 2009, I thought that with the GFC crisis, there was an opportunity to first that the market will grow as it did, and then to create a company that will basically become expert in an area where, because of the dynamic of the market in 2009 and before, booming market, no one was really taking care of this. There was no system, no software, no processes, nothing there. So there was an opportunity. There was an opportunity also to do the pricing and due diligence, and this was the idea. And 15 years down the road, I think that it was a good decision, and I think that today there are a lot of opportunities of things that have been applied for large institutional investors, now for smaller investors as well.
Well, from my side, not the same path, but I also came in the NPLs market from the mortgage market. We have, as Tamarindo, quite big non-banking mortgage portfolio, because Tamarindo is official credit institution which is giving in non-banking mortgages. And due to the fact, because it's mortgage, we also have had and will have back debtors, and we're also fulfilling the legal proceeding the same as we have the one with the current NPL that we're buying. So we thought, why not to go try to buy some NPL from the bank, from the funds, because we're not afraid of bad debtors. We're not afraid of somebody who's not paying, because we're already experienced in that. We know how to fulfill the legal proceeding, how to communicate, how to try to make out of court settlement, how to communicate with the lawyers. So that's how we came actually to the NPLs. Yes. From the mortgage to the mortgage.
From mortgage to mortgage. So let's go into our first question for today's topic, out-of-court settlements. So today, what are the types of arrangements, out-of-court arrangements, that most commonly are accepted by Spanish debtors? Here we have examples of discounts, payment plans, and daciones.
Well, from my perspective and experience, it depends what the debtor is ready to accept as an out-of-court settlement. If the debtor, for example, has money to pay, but he did not pay yet to the bank, probably because the debt is way more higher than the money that he can offer to pay back. So if our discount matches his needs, or less, not even needs, if our discount matches his possibilities, then we close the settlement. Sometimes it's just to exchange the real estate for the debt, where we're just eliminating the debt, taking the keys, and working with the real estate as the one that then is sold on the market. So let's say we are ready to accept any kind of settlement the debtor is ready to accept, and that benefits both sides. know if Federico has something to add.
Yeah, I think that it's a matter of, I mean, the beauty, let's say, of this is that each case is a case. You have debtors that, and you have debtors and collaterals, and in some cases, the collateral value appreciated a lot, and based on this, it could be attractive for the creditor to repossess the property and get a dación en pago if the size of the loan is also enough for the debtor to cancel this. So dación en pago could work very well. Some other cases are very different, where the loans are under collateralized significantly, and then probably the debt cancellation is more appropriate, where basically you cancel the debt and then you get an agreement while you sell the property in the market. You don't want to repossess the property for property probably not very attractive for the creditor, for the location, the appreciation of the property, etc. So it's better to avoid getting the property in your book and getting a POA, so a power to sell the property, okay? Or in some cases, the debtor would prefer to keep the property for whatever reason. They have a more stable income now. Their economic situation improves, and they can get another mortgage, and they, with these funds, they can cancel your debt, and then you negotiate a full cancellation without a discount or with some discount, depends on the specific of each loan. But yes, these are the main solutions that we use here in the markets.
Could you give examples of some early warning signs that the debtor may not be willing to cooperate or be open to a settlement, an out-of-court settlement?
That will be or will not be settled?
Excuse me?
Will be open or will not be open?
Will not be open.
Okay.
Some early warning signs that the debtor will not be open.
Well, from my practice, it's a huge amount of oppositions and appeals that appears in the courts from one side. From the other side, there are no debtor on the other side. There are no debtors by any reason. Sometimes the person, unfortunately, is not with us in this world. So there is no one you can talk to, and sometimes the children or grandchildren are not irritating this real estate. In this case, it's quite hard to make out-of-court settlement. Sometimes when you see as I have mentioned, the huge amount of appeals and oppositions, and also there are situations when we do meet the debtor, we try to talk to him and to his lawyer, but we see that they're not negotiable. So this, sometimes you meet the people that think that they're right, and they will win at the end, which is not actually true, because what the law says very, very specifically, if you took the money, you must return the money.
Yeah.
If you're not able to return the money, then probably some collaterals should be taken on the place of the money you've taken.
Anything to add, or do we move on to the next question?
No, I think that we can move on. I think it was very clear.
Okay, very well. So the next one, could you share briefly a recent successful out-of-court resolution and what made it work, but in practice? Because we hear a lot of theory, the investors see a lot of theory, but in practice, how does it work, and how has it worked recently, a successful case recently?
The good thing that I will start. The good thing is that in this case, the out-of-court theory matches the out-of-court practice. As I have mentioned before, I can describe recently 2 out-of-court settlements that totally fixed my words previously. We bought one NPL where the debt amount owned by the debtor to the bank was higher than the real estate price. We bought it with discount. We sent him the official letter that we are the new creditor, asking him to get in touch with us to collaborate and try to find a solution. He came to us after some time saying, listen, by any reason, I bought this apartment because I thought that I would be able to make it as a tourist apartment, to rent it, etc., etc. He had a business plan that did not work at the end. And he told that I have a buyer for a specific amount, but unfortunately, this amount does not cover the debt that you bought. And we thought, okay, let's try to find a solution. And we found a solution, the one that I explained before. We agreed on the discount. We received the money. The person was happy that he got rid of the real estate and debt. Real estate is not only real estate; it's tax that should be paid on an annual basis. Community expenses, water, heating, all this stuff, and he get rid of this headache. Another that happened was also the one that I explained previously. We got in touch with the debtor. It was not so smooth negotiation. On the first hand, he was trying to find, let's say, the solution that would benefit him more. But from my practice, the debtor started to work on two phases. Just when the legal proceeding starts, because he understands that somebody is trying to work with his debt, and before the auction. He understands, well, this is the final stage. Probably all the oppositions and appellations are already passed. So after the auction, I will lose my real estate. So with this debtor, he came to us and listen, I'm ready to give you keys and you take the real estate. And we agreed because we understood that obviously the margin allows us to work with this real estate and to sell it in the market. So that is the two very concrete and specific examples matching the theory that I mentioned before.
Mm-hmm. Anything from your side, Federico?
Yes, in most of the cases that we get we on board, basically what you see that what you learn is that there is a sort of a big miscommunication or lack of communication between the initial creditor and the borrower. Of course, this is a relationship that is not working, okay, because the initial creditor gave the debtor a loan, he defaulted, he didn't pay, so they're not happy. They're not happy, they are not willing to talk, they're not willing to negotiate, they are not willing to anything. Okay? Simply, and they cannot do this because if they do this with some borrowers, they need to do with the whole book. So they have a big problem. So there is a problem there. Now, the moment that someone buys this, we buy the portfolio, we on board, you start a new relationship. You start with, okay, you have an opportunity. Okay, we are not angry with you. We want to find a solution. But most of some successful cases that we have on the table are simply borrowers that they were not even being attended by the bank to try to find a solution because they didn't want a solution. So picking up the phone, talking, listening, and finding a solution. And then the different solution tools that we have in place. So this is mainly the main case. So talking, having tools, willingness to talk, willingness to negotiate. And in many cases, what we realize is that with a new approach, new opportunity, flexibility, you are able to find good solutions for creditor and debtors.
Okay. So how do you typically structure or approve the settlements? Is there a common threshold or a policy which investors should know about?
Well, we do have a very, very specific policy, which should match the return for the investor. Let's say the first thing that we take into consideration is the return on investment for our investor. If it matches this number, the third one, then we're ready to start negotiation. If it's below investor's expectation, then we can negotiate a bargain. But if not, we're continuing with the legal proceeding. But what investors should keep in mind that his or her their interests are always on the first place.
Yeah, this is more Ilya's area, but we have very specific guidelines from them, from investors, and Ilya and his team to where should we move. What is the area? Okay, so But everything starts, if you do everything well, everything starts in due diligence. So in due diligence, when you start doing the analysis of the case and the real estate, you already should have a potential path, okay, with timings and real estate, etc. Okay, collections and timings. So if you do your work well in due diligence, and then you have very disciplined procedures and guidelines, normally it is an efficient process. And of course, we are always going to try to move in this area where we find the best of the interest for the investor with the client in our case.
It looks like that's all the time we have left for today's video. And now, make sure to tune in for the next video where we will discuss collaboration with debtors. Follow our social media and subscribe to our YouTube channel. It's free, but it helps us out a ton. See you there.